Good afternoon, everyone. Today is Friday, February the 19th, 2016. My name is Christian. We'll be looking at a couple of different major market charts today and kind of show you what I'm looking at and what I'm thinking about the markets here. Starting off looking at the NASDAQ, this is a 6-month chart. Each one of these candlesticks represents 1 day of trading activity. Now, the thing I want to point out here today is not really so much about whether or not this is a peak. Have we peaked here? The answer is I don't know. We could have, and you note this low point here is beat by the following day's lower low, and then this high point here beat by the next day's lower high. I mean, that you could look at that and say, all right, well, that's starting to show that. But at the same time, we could just be kind of consolidating here for a couple of days, and then make another move next week, early next week, like this. Okay, so that's something to think about. But I don't think this really has anything to do with what's really going on. What's important, at least. You could move up here and come up here and test this 4,700 level, or move up a little bit higher even. But I think overall that's really not what's important. What is important here is the overall trend, and that overall trend is indicated by the death cross here that we have the 50-period moving average, this blue line right here, falling below this red line right here, the 200-period moving average. And these are simple moving averages. Whenever you have this condition that sets up like this, it's a bearish signal for the overall market. All right, and we've seen this happen before, okay, but then it crossed back the other way. I told you when this was happening that this was just going on as the market was trying to find its next direction. The market moves in 3 different directions: up, down, and then there's sideways. But that sideways can be consolidation before moving higher, or it can be rolling over before moving lower, right? So there can be different definition of that sideways moving activity. But overall, what we saw here was the bearish death cross happens here, and then we shake it off, the market tries to at least, and then it comes up here and still makes a lower high than you saw back here. Can't see it on the chart anymore, but it made a lower high. So overall, the bigger picture was still showing possible reversal to a downtrend, even though at the same time period, you were showing right here, all right, a series of higher lows and higher highs. So at that point, it might be looking like, well, wait, we're getting mixed signals here, which is basically what I was telling you guys about when it was happening, was that you're going to get that whiplash because the market's trying to find its direction. Well, at this point in time here, we get a more bearish signal, right? Death cross. That's the second one at this 6-month time period. You can see we've had 2 bearish crosses and 1 bullish. So just on the numbers, we'd say, okay, it's twice as likely that you're going to a bearish market as opposed to a bullish market. But in any event, whenever you look at this, what I want to see next is price activity confirming that. And for me, that is breaking of support levels. Price has got to start tearing down what bulls built up, right? So you have this, of course, breaking this little trend, this bullish trend you had going on from back here, and you had that broken down here. But then we come down here, and we bounce off of this level here, which is what I was saying that could happen. You come back up here and you test this level here like you did over here, and you could form a head and shoulders pattern. You could do lots of different things. You could even continue on to the bullish perspective. But that's not what happened. Instead, we found some resistance, and we started to sell away from that. Bounced up there again. We found a resistance, sell away, and we got a sell signal by a break of this little trend line here. Another way you could draw it would be like this, but it doesn't really matter. The main thing is that it broke down. And then we come down here and we take out this level of support as well, okay? This is what, for me, confirms that death cross, that bearish signal of the averages, is that we're starting to break down the bullish uptrend. It's starting to fall apart. So now we bounce back up here, and you have some people, I'm sure, that are saying that this is the bottom and we're going to rally up here and test the previous high and break out and blah, 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 blah. None of that really matters to me. What matters to me is simple. And that is, what is the real trend, the overall trend telling me? Overall trend here is down. As long as this 50-period moving average stays below this 200-period moving average, I'm going to be bearish from here until how many ever years it takes for that to reverse, okay? So when we look at this bounce here, I'm looking at this as a short opportunity. That's all I'm interested in, is the bounce. If it gives me a short sell signal, and where we find that resistance. Do we find it right here? Like we come up next week and keep pressing up here, and we find that resistance at the same level we found it here, here, and at the 50-period moving average. Completely a bearish trend set up. Perfect. Okay, so that's my overall thesis on the market, and I wanted to make sure that everyone's clear that when you hear traders talking about higher highs and higher lows as an uptrend, or lower highs and lower lows as a downtrend, that is true, but it's an oversimplification, because anywhere you look on a chart, and any chart, you will find mixed signals. For example, I just talked to you guys about, let's look at another one. You've got this low point here, which is lower than the previous one here. Okay, this high is lower than this high. Actually, it's the other way around. So we're looking like this, and we're looking like this at the same time period. Okay, which is mixed bag for you, telling you moving sideways. And then we come up here, we get a lower high. Well, that's starting to confirm that downtrend, right? And then we get a higher low. Well, no way, that's going back the other direction. You can get whiplashed all over the place just looking purely at price activity. The best thing to do is look at the overall signal and try to filter out the noise. That's what simple moving averages do for you. That's why they're so important. And so when I'm looking at this chart, I say, okay, the trend is clearly down at this point in time. All I want to do is sell the bounces that come up to that 50-period moving average, sell those as opportunities to see this thing press lower and keep breaking down that bullish thesis that we've been building for so many years. Let's have a quick look now at the Russell 2000 Small Cap Index. This one is actually broken down before many of the other charts, and so I want to use this as an example here. You'll notice the bear cross right here, the bearish situation where you had a 50-period moving average cross below the 200-period moving average. That was where you would look at that and say, okay, this is now a bearish situation, bearish market. You have a bounce up here. You got a nice sell signal right here over sold on the slow stotch right above the 80 lines, where you look for those opportunities to get short. You could have sold away from this 50-period moving average and then made money on that move lower. But note also here that even though you made a lower low than you made before here, then you come up here and you make a higher high, right? Now, this is something that's going to happen with price again and again and again. Higher lows, higher highs. Oh, well, now all of a sudden we're in a bullish uptrend. No, we're not. Look at that simple moving average. You got the 50 period still below the 200 period moving average. You have not changed anything. I don't care what the markets do, as long as you have this condition with the 200 period above the 50 period moving average. Use the bounces most intelligent way you can to sell them. That's it. That's the only thing I would look at this market from now until, I don't know, maybe who knows how long. So I just want to kind of bring it to your attention that this is very clear. The markets are rolling over. More and more of them have already broken down major support lines. Okay, you can see this kind of stuff going on. And as that's happening, there's no reason to be looking for bullish opportunities. Okay, I just want to share it with you guys today. I hope you enjoy your weekend. Be safe, and I'll see you again in the next one.